projects that you start now might not finish until 2 years in the future. When I started Aura 7 years ago for £150 a month, I had an external bookkeeper help me with all of my admin and my accounting. Fundamentally, if you're not using Xero, you need to be able to report on all of your financial health within the business, and Xero is a great accounting software to do that. We had our boardroom session yesterday, like we mentioned. One of our mentees asked about financial planning and financial management 101 for developments. And we're going to spend a couple of minutes sort of explaining how we do things. They did everything on spreadsheets, which kind of has enough information to grow to a certain size. And when Jack and I started out, we would have our kind of main pipeline spreadsheet, and we sort of had a very loose overheads and sort of revenue expected, cash flow forecasting and all that sort of stuff. But as you grow, you're going to need more than that. And the one thing that I would recommend for everyone to do is to get a subscription to Xero. That's Xero, Xero. It's an accounting software. I've never known anyone that's moved on to Xero that's moved back over to something like QuickBooks or Sage. Xero is extremely user-friendly. It can do everything that you want it to do from a reporting perspective, budgets versus actuals, profit and loss, balance sheets, and all these other things which we're going to come on to and talk about. But some of the things that we spoke about yesterday in our boardroom session, the people that you need in that accounting process within your business. Now, these can be internal or these can be external. And when I started Aura 7 years ago for £150 a month, I had an external bookkeeper help me with all of my admin and my accounting. So there's 4 key people that I think you need in or outside your business. Somebody has to play this role. Number 1 is some form of administration, preferably in-house, because actually they will be the people raising invoices day to day, managing invoices that come in terms of they come to you first before then sending them out to your bookkeeper or your accountant. So add some sort of administration in-house. Secondly is a bookkeeper. Now the bookkeeper is there to utilize the Xero accounting software, receive invoices from your admin assistant, reconcile bank transactions. So as soon as a bank transaction comes in, it's reconciled to the accounting software, it's coded, and it's allocated to a project or part of a project where it can be tracked and be pulled into all of the reporting that Xero can do for you. What you'll probably want on top of the bookkeeper is somebody like a finance manager who's a bit more experienced, can look at the bookkeeping that's being done, check that everything is done correctly from a VAT and a structuring and a coding perspective, and present the information in monthly management reporting and meetings. On top of that, if you're at the sort of stage that we're at and we're looking ahead a little bit further and we've got a lot of things that we're juggling, you might then want to get a finance director involved, so an FD. And those are the 4 people we think you need. Now, this doesn't have to be expensive. We use the same company for our bookkeeping and our financial management, and then we bring in some external help from a financial director perspective as and when we need it, and we just pay a consultancy basis on that. And then the admin in-house, when you're first starting up, that admin probably is you, until you bring in some admin help. That might be you doing the invoices, forwarding them on to your bookkeeper. Once you've got all that in place, you're then going to be looking at your individual projects, your business as a whole, and to run a successful business, you're going to need some form of management accounting and management reporting. And that for me has 3 key elements, and those 3 key elements are profit and loss, your balance sheet, and then your forecasts. So profit and loss will give you a snapshot of day-to-day profitability of the business, looking at your sales, your revenue coming in, your cost of sale to give you your gross profit margin, then your overheads, which then, when you deduct all of that, you get your net profit margin on a monthly basis. Your balance sheet is where your assets sit. So this really shows you the sort of true wealth and health of your company. It's going to have your assets and liabilities. Some will be current liabilities or longer term liabilities like loans and any invoices that are outstanding, the cash in your bank, and that will give you kind of, a statement of wealth, a net position. So your assets minus your liabilities, you'd hope that you would be in a net position once you deduct your liabilities from your assets. And then your forecasts are all about forecasting forward. So in our development business, we look more like a 3-year forecast, because fundamentally projects that you start now might not finish until 2 years in the future. So you want to know that, when those come in, what cash position are you going to be in? What costs are you going to have to outlay? And Jack and I will meet on a probably 2-weekly basis to just look at cash flow forecasting. Has there been any slippages in projects whereby it's moved a couple of months, or we know that it's not going to be finished on time and we have to allow for, some lag in those funds coming back into the business? The idea of the forecast is that once you've got all of the projects programmed into that forecast, you can then see where your cash position is. And our finance manager, which I mentioned in the first section, our bookkeeper and our finance manager help helps us with that forecasting. So every month, effectively, the forecast is updated with the historic information so that we can then see our cash position at the start of the month, what's happening this month and how it affects things going forward. And your forecast will be the thing where you look at if a project does slip or your sales slip into the following year or a couple of months and you forecasted them in for this month, for example, you might have a 50, 60, 200, 300 grand red area in your cash position that you have to plug, and your forecast is going to show you that. So these three things are super important for any business, whether it's a development business or just SME business like Aura and XP Surveys. These are the things that we review on a monthly basis. We sit down with our finance manager at the end of every month once everything's been reconciled. We review our profit and loss position. We have a look at our updated balance sheets, and we review our forecasts more regularly than that, because within a development business, when you've got 5 projects on the go, they all interact. And what you don't want to do is have a sort of house of cards scenario where one project really goes tits up. You forecasted for money to come back into your business to be used elsewhere, but you don't have that money to use because there's been delays and overruns in costs, etc. So to keep a healthy business, to keep your financial planning in line, these are the things that we do. If you've got any questions on that, drop them down below, because I know that was a really big sort of quick whistle stop tour of what we do. But fundamentally, if you're not using Xero, you need to be able to report on all of your financial health within the business, and Xero is a great accounting software to do that. Make sure you get that first, put your team in place, and then make sure you have regular monthly management accounts created so that you can understand very quickly the health of your business.
I've got a question for you. So the challenge is I've got to give you some seed capital and you've got to go and set up your own business, brand new, clean slate in anything, for an example. Would you rather have £250,000, £250 seed capital to set up this new venture, or 175,000? And the second option, the lower amount, you're allowed to use all of these tools. So you're allowed to have an admin, bookkeeper, finance manager, FD, profit and loss, balance sheet and forecast. But the other £250,000, you have to be completely blind.
I mean, I'd rather have all of these people in place, because that 75 grand would easily be gained back faster by having these people in place and having the management there ready for you to use. So it actually doesn't matter what size your business is. You should start putting these things in place. I've done so much business coaching with like external people in like a group structure, whereby you can clearly tell they don't understand the finances in their business. Their invoicing is done via a Word document. They have to file and spend loads. No, the £25 a month Xero subscription fee is saved purely by the inbuilt invoicing process. Now, if people are using PDFs and using Word documents and sending out invoices via emails themselves, and the amount of time that this accounting software will save you should allow you to bring in a bookkeeper at £150 a month. That's what my bookkeeper cost Aura in the early days, to give me everything that I need and free up my time from all of this stuff. So it's absolutely needed.